Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, September 10th, 2021. I'm going to start out here with the broad markets, and I'm going to, possibly going forward, pick up coverage a little bit more on those in light of the sell signals that came late last week. We're approaching the first target here on SPY right now, and again, this is do what you want if you're an active trader. It's only it's a very small, unusually small target. It'd only be a drop of about 1.5% since the SPY broke down here. And by all means, if that's your thing, you want to just book a quick profit. If you did short it, then by all means go ahead. But I do think there's more downside to come. That would be one of the smallest corrections in quite a while, especially considering the divergences in the sell signal. Even these little drops were quite a bit more. So I just want to reiterate my thoughts and my expectations for a drop down here to at least that third target, which is currently the final pullback target, but may very well be extended. And again, we need to see a little bit more, especially on the daily chart. I'll flip over to that in just a second, but what I'm going to do before I move on is cover the futures as well. And we're focused really on the large caps, small caps. If I hit on it, I'll just point out that they remain in a trading range that they've been in for, gosh, almost a year now. So all right, let's move on from there. Other than that, I did want to mention that give you this minor support level last week, and saying that would, the break of that would probably bring us down T1. We broke it, made a back test, and there we are. So we are stair stepping lower. Again, this is just a little micro time frame, very near term time frame, and that's what you see. So this is the very near term downtrend. Here's our, this is the longer term trend. If you go to weekly chart, obviously it doesn't take a rocket scientist or a skilled technician to say we're in the primary trend is still bullish. But again, we're talking different time frames here. This is the intermediate term time frame up to here, and that's still at this point in time bullish, but the near term trend is bearish. And if that continues down, what happens if we start to take out some of these previous reaction lows? Really, that's what you want to look for, and that's why I still have this this area down here where T3 is in purple. That to me is a pretty significant level if and when taken out, and the bottom of that, so we'll call it about 436. Then I think that most certainly will open the door for the potential for more downside, and if and when that happens, I'd expect the selling to begin to accelerate. Right now it's kind of just a slow grind down, just like it's been a slow grind up. But again, that's it. Technically speaking, breakdown, sell signal, secondary breakdown of the minor support level, back test. So I'm getting nothing but check marks recently, which increases my conviction, even though it wasn't the ideal bang. Sometimes you start corrections with a bang, you have a very well-defined trend line, and then a boom, a solid breakdown, impulsive, everything you want to see below it, followed by other additional pulsive selling. Sometimes you get that, and sometimes these strong rallies end with a whimper instead of a bang. So far, we'll see. Again, let's not get ahead of ourselves. We're not even at that first target yet, but if we do, it is support. And then if and when that gets taken out, targets I put at 446. The support's about 445.90. And the way it works, you take that one out, it opens the door to the next one, and so forth and so on. So that's SPY. Let's move on. QQQ is the recent trading range. There was our sell signal in QQQ right there. Broke down, been moving sideways in this range, and so here is the magic number right now. I'll give you a level, and I'll even set a price alert for my own heads up here, and that's about 378.44, and that's the bottom of this recent trading range. So just like I gave you that minor support level on SPY, we now have it on QQQ. We didn't the other day. I didn't give you one because we didn't have enough reactions, but since then we have enough reactions on or near the bottom of that level, and so that should do the trick, I believe. A solid break, especially a 60-minute candlestick close below that level, should open the door for a move down to the first target, and then if and when that's taken out, that's a level where we're likely to see a reaction, and then another leg down to that second target zone there. And once again, that's about 360.50 up to about 361.80, give or take there. And just like the indexes, at least QQQ, in this very near-term time frame, remember we're only going back to the end of August there when that started. Just like we have a trading range there, and the next break of this solid break above or below is likely to determine the next trend. That's what I prefer, but we'll see if that happens. And obviously that foils the bearish case, but my convictions today are stronger than they were a couple days ago, and will be a lot stronger if and when we break 378.44. But just like we have that little trading range there, when you go to IWM, 60-minute chart's still a mess. It looks like an EKG, just back, forth, up, down, kind of with an irregular heartbeat too. But the daily chart talks about or shows this right here. There it is. There's our trading range since the beginning of the year. We entered this box, this shaded box right here, back right in the beginning of the year, and it's a pretty darn tight range. You can see completely sideways, and it's also tells you something. The small caps have been lagging behind while the small caps go on, and it's the same thing I talked about. It's the same market breadth deterioration I've talked about. It's fewer and fewer stocks, namely the big heavy tech companies, Microsoft, Apple, Amazon, those that actually benefited from COVID in the stay-at-home trade, continue to do most of the heavy lifting in this market, as is evidenced by all those breadth indicators I've covered recently, as well as the fact that these small caps are lagging behind and are still well off their 52-week or all-time high, which was back here in March when we were at the top, or we hit it a couple times. We've been bouncing around the top of that range, but we're still below it. Okay, just a couple other charts to show you on the indexes. I need to update ES, the S&P 500, for you futures traders. I color coded this line. These should be the same levels as the last time I updated this chart. It's probably been since earlier this week, maybe even last week. Nothing much has changed. We recently put in a divergent high. We've been stair-stepping lower. And this is a big level. In fact, since I started the video, I guess did we tap that already? Unless that's an erroneous candle right there. There's a little skinny shadow here. I'll zoom in. But again, that's a level. Yeah, we're trading right now at 44.94.50 on ES. And let me just look at another. We hit a low of 44.67. Yeah, we actually came right down to that level, right about there. And that is key support for me, a pretty significant support level. That's why I colored it yellow. Why is that? Well, we had a major reaction high there, followed by a correction. It was support right here. We had a little bit of a whipsaw there. We set up this uptrend line, which caught that pullback. Went into this sideways trading range recently. This is just like on ES, that 60-minute chart. I'm sorry, on SPY I showed you. We broke down, back tested, failed so far, and that's our magic number. So we need to take out 44.75. Yeah, a little bit above that. That'll open the door for a move down here, I believe, to 44.17.33. And then I have these purple levels that are still very important. That's at more of a support zone. Runs about 43.82 down to about 43.45. So again, for ES traders, those are some potential targets for you there. Let's look at NQ, and then we move on to one more chart I definitely want to update, and that's my low volume indicator. All right, NQ, let me find you. There it is, NQ NASDAQ 100. So what I've done here is added a line. Again, I showed you on QQQ, I boxed in that trading range, and you can see a very tight trading range on NQ. This trend line, this is a trend line I had the last time I updated this chart a week ago, and I went on earlier this week, or late last week, I changed it. That's why it says MOD. I modified this trend line. So you still have either one. It's really irrelevant because that was the original one I had. We broke down. Then I added a secondary trend line there. They're almost so close, you can't tell the difference. Either way, we broke below both of them. But as I said, it's not been an impulsive drop since then. So it kind of gives more of a soft sell signal, but we have been trading sideways. And again, this would just give me another check mark if and when that level's taken out. That level, by the way, is about 15,521. And again, that's that yellow line. First support is about 15,300. We'll call that 15,400. Let's round it up, and then 15,152 And that is, again, this right here would be a minimum preferred target right here. I think we'll drop once that yellow line's going taken out. I think we'll get a little reaction there, maybe not, and swing on down here. So that means I'm calling for it minimum another. And again, it's be a minor pullback, and that's why I may add additional targets. That'd be about a 3% drop in the Nasdaq 100 from where we're at right now. Okay, and before we move on, and I'll wrap this video up with just a handful of new trade setups, individual stocks, being that we have some sell signals in the market. Most of these I'm going to go over will be short side trades. But before we do that, I want to revisit my an indicator I've shared many times over the years, and I find it to be one of the more reliable indicators. Unfortunately, it's not an exact timing indicator. You get your exact timing on entries and exits with breaks of support, resistance, trend lines, things that I just showed you earlier on in the video, the levels I'm waiting to break next for the next sell signals or add-ons. This, however, this low volume sell indicator or sell signal indicator, I should call it, is have two lines down here, a yellow and a red line. The colors don't mean much. It's just really a zone. Sometimes you hit the top line, which is red, and then sometimes you'll drop all the way to the bottom line. But the bottom line is it. You don't ever go below that. And what I'm talking about is I put a 10 day or 10 period. It's a daily chart, so a 10 period is the same as a 10-day exponential moving average on top of volume. I do that to smooth out the spikes, because if you're going off a daily, if you're not using an EMA, you're going to have holidays, abbreviated trading days like Thanksgiving and all that, where the market closes down early the day after Thanksgiving, things like that. And you're going to always have a very low volume on those days, both because they're holidays and sometimes you get the abbreviated trading sessions. So by putting a moving average, it kind of smooths out those little quirks and makes it a pretty darn reliable indicator. And as I often say, it's not an exact timing indicator because it's showing you more conditions. Just like divergences and overbought and oversold are not hard buy and sell signals. They're conditions in the market that tell you when a stock or the market is overbought, guess what? It's probably going to have a hard time pushing a lot higher. Now, sometimes, and again, depending on the individual security index, overbought can stay overbought for days, weeks, months, and again, that depends on the individual security. But in this case, you can see the ranges here. I'm going back all the way into 2017, and this is we hit that top line right here, and that's where the box is, and it showed you. So we had that persistent low volume. We stayed down, tagging that low volume levels for quite a while, and then we started to move higher. Then the big drop came. It was a good size correction. Doesn't look like it much, but these are all double-digit corrections that followed here. Back in 2018, it only lasted a couple, maybe a month or two, and then we had one of the biggest drops in years. It was some indexes fell over 20%. The S&P fell nearly that. I think it was actually a little over top to bottom from high to low, and that was again signified in advance with the low volume indicator. We kissed it there. That was a one and done and a nice correction there. It was probably good for at least 10%. Kissed it again, another correction right away. Had the low volume persistent conditions leading up into the drop into the COVID lows. So again, another one that correction that was not missed, that was clearly foreshadowed by that indicator. We had it first time since the big drop into COVID happened later that fall right there. A brief period where we hit both the top and then the bottom low volume indicator. Biggest drop since the COVID drop. And then right here we had conditions that resulted in a very small. So that one I'm going to say, look, we had the persistent low volume. I would have probably pointed out at the time there was a correction, but it wasn't much. So the takeaway is nothing is 100%, but this one's darn near as far as predicting these, and we've had this for a while now. Now, where I'm going, I pointed this out, it was just a few weeks back, and the weird thing about it, I said, look, I was talking about it for a while. We had it on SPY, but we didn't have it on QQQ. I'm talking about being at my levels. And then all of a sudden, we hit it on QQQ. Now, I believe that was right here. Now, the thing about moving averages, and this is my bad, it's jumping the gun, is that moving average will change if all of a sudden volume spiked up. So, and I'll have to look back, but I could have sworn that day we were on the red line, but I have not touched these lines And so basically we didn't have that signal. Last time we had it was right here, and that was before that drop earlier in the year. The biggest drop of the entire year was foreshadowed by it, and you can see we haven't hit those levels until now today. Now this can change as well. I believe that the moving average was on the red line when I did it. I must have been back here. Maybe it was right here not too long ago. Maybe that was it. I'll have to revisit that. But what happens if volume spikes the next day? It pulls that moving average up. So the intraday, it's going to, right now it has it down almost or close enough to that red line. And so I'm going to be very clear here. Basically, if we pop and the volume starts rising later today into the close or next week, then we're going to move away and we may not hit that red line. But you can see on this charting platform, I'm going to hover on the line. I have not touched or modified these lines. Last time that line was moved in any way or extended or I changed a color, any edit to it was back on in 2019, August of 2019. So I'm just trying to say, look, we don't have or didn't have that sell signal, even though I did believe I covered it in a video. I thought we were on there. So I'm gonna watch this one and tell you right now, if we close the day and the volume stays low, it's the signal's gonna fire. And if we can look back in a few days or a couple weeks and we touch that red line, say what you want. I'm going to call it a signal, whether it pans out or not. So there's our next signal. You can see I have lines here when these other corrections, when the tops came. And again, these were all sizable corrections. I'm using a line chart here, so it's not even showing you the high to low. Line charts show you how it closed the day. And that's why a lot of these moves, if you measure them on a candlestick chart, you're going to have a bigger drop from peak to trough, because usually when the on the top you have a candle at the high, that candle prices reverse, closes a day lower, but the top of the candle sticks up there. Same on a bottom, and on bottoms more so. You usually have big candles on bottoming days because you get that final capitulation selling during the day, and then a reversal where the buyers step in into the close and close well off the lows. That is a typical bottom. Rarely have I seen a market bottom on the bottom of a candlestick. Usually there's some type of intraday reversal, and then the next day the buyers step in, and so forth and so on. So just want to point that out, that the drops are even bigger than they appear here from top to bottom on this using the line chart. And on QQQ, even using the line chart, that one was measures out to about 29%. So again, you can look at it, see all these lines. Pretty darn reliable indicator, and it's firing right now today. So we'll see. I'll follow up on it and let you know if that signal is going to be confirmed in the next few days or so. I just wanted to point out once again that I may have cried wolf on it because I don't see it hitting here based on this 10-period moving average, the way it moved up after that last signal when it got close enough to that line. All right, that's enough. That's more. I've just spent more time talking on the indexes than I have in quite a while. So that coupled with everything else, look, the day that I stop paying attention to these indicators that have worked for so many years with good reliability, not even my indicators like that one, other ones like market breadth deterioration and extreme put call ratios and all that, is the day you've got to give up on technical analysis, and I'm not there yet. This has been an unusual market. It's been pushing the extremes on a lot of things such as sentiment and divergences and things like that, but it's still worth noting. One other thing worth noting here is I've got a lot of lines here on QQQ, but the average true range. Let me look at SPY real quick. No, that's not it. Yeah, you can see here on SPY, the average true range. Here, let me turn off all the lines here real quick and show you. We have this price compression. It's been going on for quite a while now. Every now and then we see a little spike up in volatility, and you see bigger candles. Those come on corrections, and right after the corrections, the buyers step in. Correction, big green candles, and then we just revert back to this very low range. And one way to look at that is this indicator down here. It's called the average true range, ATR, and I have it set to a 7-day period, so it smooths out 7 days average, and that's the range of whatever security you're looking at. In this case, on SPY, so you can see the average true range is very low, and I'm gonna. Here, let me park these other indicators and we'll just focus on that one. And then we'll move on. I promise you I'll get off the indexes. But here it is. So you can see over time, let me turn off all these levels too. Over time, we've fallen to about this level right here. We're getting down there pretty low, and that's where a lot of the big corrections come from. And again, it kind of jives with that low volume that I've talked about, my low volume indicator. So when the ATR falls to low levels, and it has been falling, and it's certainly low now, it's not down to the extreme. The way I had it here, I do have a red line down there. That's typically when corrections follow, when you get to the ATR price compression. And what it is, it just kind of jives with all the other indicators, the momentum indicators, divergence. It just says momentum is waning. The vigor of the rally is waning. We're not going up as much every day. Buyers aren't coming in as aggressively buying the dip. So that's just another condition in the market. And this ATR could continue to drop for a while. And even then, there's no guarantee it'll play out. But usually it does. You can put it up on your own chart and see where we are. And play around with the period as well. You get different results if you use a different period than I'm using here with the ATR 7. Okay, I've been combing through stocks all morning, looking at looking for setups. Came across this one. I'm going to get this one out of the way first because it's the only long that I scratched down, added to my notepad today. TLGT. Forgive me all these lines on here. You can see what happened. It must have had a split somewhere along the way. Yeah, there it is, 1 to 10, and these lines get all moved. I haven't modified these horizontal lines to look, it's a very low price stock, but this is what's been going on lately. Dash for trash. Companies, these Reddit folks are pumping up like CEI, that's an energy stock. You see a downtrend line. It was a penny stock recently, broke the trend line, and it's been ripping the last, just in the last week or so. It's up about 213%. So again, don't underestimate what these penny stocks can do. Speculative to no end. This company, when especially in the energy sector or any sector, and it's fallen, from split adjusted. What is that? $9,000 a share. If that's even more than that. What is that? Oh, million. So it's down to nothing. It's a penny stock fill. But fundamentals don't matter on these. You get these little breakouts. There was divergence and everything else. And again, that one's gone. That one, to me, that ship has left the station. I didn't hear about it until earlier this week, and it was already broken out. This one just broke out. Identical pattern, similar pattern, downtrend line. In fact, since I found it this morning, it's already moved up another 11%. So I won't say the train's left the station. It is at resistance. These lines I've had here forever. That one's back in 2020. I've added this line on here, and it's about the 48-cent level. These lines may have adjusted with the split. I don't know if I had them on here before, but I added this divergent line recently, and let me show you. There's your divergence right there. So that's the setup for you. Speculative, aggressive, high risk. Could lose all your money when you play around with these penny stocks. You roll the dice that any day that company can come out with an announcement that they're filing, seeking Chapter 11 bankruptcy protection, and proof if they haven't already done so. Sometimes they, may have already made that announcement. They're not in bankruptcy yet. It's you'd see the symbol would change. But anyways, take it for what it's worth. We're at 47 right now with my first target 48. Again, that's a level I've had on here for a long time. We hit it almost to the button today. So if we pop it, then it opens the door to these next targets. Let me see if I need to modify that one. Yeah, you know what I would do? If you're interested, I'll give you one more right here. You have two reaction highs that line at 68 I've had there again since 2020, early 2020, but I just added a line here at 65. That's where you might want to, if you're holding out for that level, take profits at just under maybe 63, 64. Or let it run, just like CEI. You get in these things, their momentum, and you start to get the short squeeze. Fundamentals don't matter until it ends, and then it drops fast. So if you trail up your stop and let it run, again, take it, don't take it. I just want to pass it along as a gunslinger trade, aggressive. Now we're going to look at short setups or actionable trades. Big difference. This is a setup. This is DXLG. If I remember correctly, they own like big and tall stores, and Destination XL Group. And back here, it had a nice divergent low back in heading into the beginning of 2021, and it's had a healthy rally since then. A bottom there, and the stock is up a mere 3,829% from there. So to say it's overbought, it would be an understatement. It's my kind of setup. And again, it's not actionable, but there's big divergences building, just like there was divergence building back here. That was that line I put back. So yeah, I would have had that line on there back on 2021. And now we have the negative divergence. So pending a break of this trend line, uptrend line comes off the early 2021 lows. Use log scaling or you're going to get a different chart. This is what it looks like if you're using arithmetic or non-log scaling. Completely different. You can't draw a trend line up on there. You need to use log scaling to get an accurate representation of the stock. Stock that's moved up from 20 cents a share up to $7.20 or whatever it is. Targets 416, 324. That would represent from where we're at today, assuming it reverses, 41% drop or a 54% drop if my final targets hit. So plenty of meat on that bone, just waiting for a sell signal. Coal stocks, I just want to mention, I'm still watching them. Haven't forgotten about them. I haven't seen any significant developments. Waiting to see a few more of those break down, and then we'll be shorting coal. TMST, it looks like. Oh yeah, I have a few steel companies that are on my radar, and this is one of them right here. I'm just looking at this downtrend line. Let me take that off. All right, this is the primary uptrend line right here, and I believe this primary uptrend line will be visited sooner than later. That sooner will come, I believe, when 1258 is taken out. So a break of 1258 could take this one down. The target would be the trend line there, and negative divergence, everything else. There's a couple other steel stocks. Birds of a feather move together. I'm sorry, this one's aluminum. Did I say steel? I should have said aluminum. AA, Alcoa, and there it is. Divergence at resistance. There was a resistance zone. There's your uptrend line. And this one, I favor a pullback to at least this $30 level. So that would be, we're at 40, almost $50 a share now. So that'd be a nice drop, about 41% if you get it. We're well off the trend line right now, but I think a failure of this breakout right here, this resistance area, will probably do the trick. But to be safe, wait for a break of that trend line before taking a full position. CSTM, another aluminum stock. This one already broke down, but the sector has been holding up. So what happens is when one stock in a sector breaks down, you'll tend to backtest, and that's what it's been doing. It's been backtesting the primary trend line. You have a secondary trend line here. Divergences continue to build, so break of this trend line will take you down to these targets, 1678 and then 1506, and that would be a drop of roughly 25%. So pretty much same thing across the board on a lot of these aluminum stocks. And then last one is ACH. This is a Chinese company here, Aluminum Corp of China. ADS, that means American Depository Shares. That's why you see these funky candles that have gaps all between them. ADSs are American Depository Shares, as it sounds, are with shares. They take a Chinese company and they bundle those shares up into a security, almost like an ETF, but it's not. It's just that company's shares that trade on the U.S. exchange. So this company is really trading, over there in Shanghai and whatever in their market. Remember, they're halfway around the world, so that's why you get these gaps. It's just when it opens, it's going to reflect how that company closed trading there the previous session. And so I just want to point that out if you're looking at it. This chart looks a little different here. There's gaps every day, so don't focus on those gaps as much as you do in a normal security. What do I see here when I look at this? Well, I just made the case for quite a few other aluminum companies to correct. You have some big divergences that have been building. And this one, you can see you get every now and then you get these near vertical runs, and they're followed by pretty strong corrections. Near vertical run, near vertical drop. Towards the top there, near vertical run, quick drop. And by the way, these drops, they might not look like much. They're measured in double digit. That was a 21% drop. I'm sure that was every bit of 21%. At minimum, I think when this sector buckles, you're going to come down to about right here, and that would give you a drop of roughly 26%, and that's ACH. One more I have on here, ASX, and that is ASC Industrial Holding Company, a semiconductor. It looks like a nice little wedge pattern there. I'll have to lay out some targets for you. I don't have those worked up right now, but think it's somewhere around here, about that $7 level would be a nice target. I mean, that's it. Really no update to the trades I went over yesterday. Still liking corn over wheat as far as the grains go, and still corn still holding that support. I told you wheat was quite a bit above support. That's why I'm favoring corn more. You have a better risk-reward ratio, and we're still there. Still an objective long entry for corn. Gold still needs a breakout above that level I've been talking about for a while, and I think it'll happen. Just needs to before we get a buy signal, and that's 1837. What else is there? Crude oil, nothing's changed there. Still waiting for a break of the support level I highlighted yesterday. Potential neckline on the head and shoulders pattern. And that's about it. And lumber too. Still liking lumber. Let's see. No, we'll end it there. Let me just find that lumber chart, and then we'll wrap this up. I had we rolled the contracts. Was that the old one? Yeah, that's the September. Trading the Decembers now, or Novembers. And there it is. So there's that gap backfill right there, gap, and we're moving up. Nothing big so far, but I still think we come up here to that 747, especially if the market can hold up. But again, I pointed this out. The stock market was running to new highs while lumber was going down. So while historically there is a pretty tight correlation between lumber prices and the stock market, there are periods where that correlation is disconnected and they actually trade inversely. So with that being said, there's no reason that lumber can't continue up with the stock market correcting. It would just give it a tailwind on this trade if the stock market could hold up until we hit this target, with the simple reason being slide in the stock market, especially a pretty impulsive correction, would indicate growth expectations falling in the economy, and therefore it would only stand to reason that people may start pulling out on contracts they have to build a new house and other construction, residential and commercial, which of course gives you a big demand for lumber. Okay guys, that's it. 31-minute video. Let's wrap it up here. This has been Randy Finney with Right Side of the Chart, and have a great day.